What is going on, everyone? Welcome back to the Team Bull podcast.
I would say really listen to what people are trying to teach you. Because there's a lot of people that want to sell you a course or want to say that they're good at something, but really listen to what they're trying to tell you and see if they truly walk the walk.
Today, we have a very special guest. He has been paid out over $60,000 in the last 6 months trading on funded accounts. He is a Team Bull Mastermind student. He works full-time, and he has a pretty incredible story that I think will benefit any futures traders listening to this, or even any options traders listening in. In today's episode, we are going to take a deep dive into his trading journey, how he was able to beat the prop firms, and not only that, some tips he has to help you beat the prop firms and get your first, second, or even third payout. So without further ado, Alex, it's a pleasure to have you on the Team Bull podcast. Welcome.
Jdun, thanks for having me on, man. I can't wait to talk about some trading, my story, and how I ended up here on your podcast from being a Team Bull member. I wouldn't be here if it wasn't for you.
It's pretty incredible, man. You know, I first started noticing you when you're posting consistent gains. Nothing crazy, not any $10,000 days, $20,000 days, but consistent payouts and consistent gains on your funded accounts. Yeah. Obviously, that's going to catch my attention. So I want to start from the beginning. You know, before we get to how you made $60,000 in the past 6 months, what's your story? How did you get started trading? How did you get interested in trading? And I guess what's your background?
Well, I've been exposed to the financial markets pretty much my entire life. My parents, taught me what the stock market was when I was younger. So when I was in my early 20s, I was just being a regular retail investor. I was just putting money in the market, buying blue chip stocks that I liked, holding them, not really caring if they go up or down too much, doing the good old just dollar cost average over time, playing the long game. And I ended up using that money to buy my first house. It was just a great spot for me to park money. I made some good gains just being exposed to the stock market. But then I started hearing all this stuff about trading, day trading, where you are in the market for a few hours, maybe a few minutes every day. You're not leaving money risk on overnight, and you're just trading what the market's doing that day. And it just grabbed my attention. I was instantly hooked on the markets. Just that energy that they give is amazing. I just loved being able to look at charts and figure out a way to make money from them.
And when was this? How long ago did you first get introduced or get a fascination with day trading?
It was about 3.5 years ago.
Okay.
So it was kind of right after COVID, world's going back to work. I was like, man, this kind of sucks. I got to go back to my regular day job, right? And work 8, 9, 10, 12-hour days sometimes. I work for my family, so sometimes it's long days. Sometimes you just got to put in the grind and get the work done. And that's cool. That's great. It builds a lot of character in you to do that. But at the same time, I was drawn to the markets because I want to be able to enjoy my life on my terms, not beholden to an employer. Even though my employer is amazing, you're still at the end of the day beholden to them. You got to show up at a certain time. You got to work a certain time. You got to do the work that they tell you to do. And I want to be able to provide for my family in a way that is meaningful in terms of I get to spend time with them. I get to be a part of that family, not just show up for a couple hours at night, eat dinner, go to bed, wake up, see your kid off to school. You don't get to enjoy life.
I think a big part of that too is obviously you're still working full time.
Of course.
So you can get into that a little later, but something as supplemental income like trading, that allows you to get ahead. If you can make an extra $10,000 a month, like you've done trading, that brings a quality of life to you that a lot of people can't get from one income. No. It's really hard, especially in 2024, to get ahead on one 9-to-5 income. I have nothing wrong with people working 9-to-5s. I think having a career is great. It's something that I preach often. I don't want people quitting their jobs to just strictly trade unless they've been doing it for years. And you're trading with a 6-figure account. There's all these different metrics that you need to have if you're going to trade and only trade full time.
100%.
What I think is cool. Sorry, go ahead.
I was gonna say, I agree. You should not quit your day job within probably I'm 3.5 years in and I'm not even close to that point of, just the stress of it. Like if you need to rely on trading as your sole income and you're still having some up and downs here and there and you can't show like years of profitability, why would you ever want to stake your livelihood on that?
Yep. But if you can do something like you've done the past 6 going on 7 months and get 60,000 plus in payouts in addition to working full time, like that's the golden ticket in my opinion.
100%.
It's incredible. So anywho, you're talking about how you've been doing this for 3.5 years. You got fascinated 3.5 years ago. You're working full time. You want to supplement your income. What's next? What's your first educational step you take? What's the first obstacle you go through? And I guess where does that story start?
I mean, next steps are just to prove to myself long-term consistency. Because nothing really, like you can have short-term success in the markets. You might be trading the algorithms really well that are in play right now. The markets are always shifting. They're always changing. You can't be complacent in the markets and never continue understanding them, learning them, refining your strategy. And so basically next steps are to prove long-term consistency, long-term profitability, build that 6-figure account that I can trade, that I'm not beholden to a prop firm. Because right now to trade prop firms, you have all these hoops you have to jump through to get money from them. But they have proven to me that I can trade in a very restrictive style to meet their expectations and their rules.
And still make money.
It's not easy to trade prop firms and to get payouts from them. All of their rules are set up for you to fail and for them just to collect money from you.
Yep.
But if you can jump through their hoops and create a trading plan that you can then execute through prop firms, you're so far ahead of most traders. Because most traders, they're like, okay, I'm going to I did it too. I started options trading in the beginning.
Sorry to interrupt you. I want to start with your beginning days. You first get into trading, you're fascinated by it. I want to go over a little later what you found to work with prop firms, how you were able to beat the prop firms so far and,
totally
take $60,000 from them that you've earned.
Yeah.
But I want to hear about when you first started options trading, futures trading, what education you went through, good and bad, and what was your starting experience to get to this point now? For sure. What's your story?
My starting point was, you hear all the talk, options. Options are the best. You can make 1,000% return in a day on options. If you would have bought this call today for $100, you would have just made 10 grand. It's how do I do that? That sounds so cool. But what they don't show you is those opportunities come up rarely, but also you had to know exactly when to buy. And are you going to hold for 1,000% gain? No.
Almost never.
Unless you're trading 100 options contracts, you scaled out, you have a runner, and you let that runner just run all day because it never even came close to hitting your stops. But they don't teach you these things in the beginning. So when I started options trading, I put in, $1,000 into an options trading account. And you go in and you're first couple trades, I maybe lose a little, make a little, but you're still just trying to figure out even your trading platform at that point. You have no idea what's going on. There's just so many things coming at you that you don't know what you need to learn, where you need to put your focus towards. So at the beginning, it was a little beginner's luck, a lot of losses because you're learning something new.
Make a little, lose a lot. So it typically goes for beginners.
Exactly. The first money you should put into the market, you should just expect to burn it, and it's just a learning experience. But nothing in life comes without a learning experience. To go to college, you got to go put in hundreds of thousands of dollars, maybe $40,000 into your education over 4 years. It's not free to get that $100,000 a job year engineering degree. You're putting in time and money into your future.
Yep. So
for me, I looked at it it's just investing into my future. I see people trading all the time that, not to brag, but it's man, I don't think that person's much smarter than me. Or I think I'm as smart as them. I can do this. I just got to put in the time, the discipline, the conscious practice day in, day out to learn how to do this.
And you could have, if I would have met you 3.5 years ago and you told me that was your mindset, if they can do it, so can I.
Yeah.
I would have known that second you were going to become a profitable trader, because that's what it takes. You know, for myself, I saw Umar Ashraf. He was one of like my mentors back in the day. And I saw him with the $40,000 days, $50,000 days. And it was like, it wasn't jealousy like you see from some people. It wasn't envy. It was like, damn, if this man can make 40,000 in a day, if this man can succeed trading, well, so can I. Exactly. And I think that's the mindset that it takes if you really want to make money in this industry and keep it. You have to be optimistic, and you have to see success and know that you are capable of that too.
Absolutely. 100%. I mean, I see Umar Asher posting on Instagram all the time, and it's inspirational stuff. But I also don't find my like worth in trying to measure up to them, because that's where traders will get in trouble. They'll be like, well, he made 40 grand a day and I only made $500. But if you look at your poster over there,
yep, I love that thing, man.
$500 a day changes your life.
Yep.
Like, what would you do with an extra 100 grand or 150 grand a year?
Yep.
On top of your day job, only doing something a couple hours a day.
Dude, I look at that every day, and I try to post it like once a week. $200 a day is an extra $50,000 a year. $400 a day is an extra $100,000 a year. $1K a day is an extra $250,000 a year. And $4,000 a day is an extra $1 million a year. Consistency is the key. And it reminds you that the base hits do add up. You know, you don't have to make $40,000 a day. Very few people listening to this will ever consistently make $40,000 a day. That's just reality. That's statistics.
100%.
But a lot of people listening to this, if they put in the work, have the capability to make $500 a day, $200 a day, $50 a day. You know, if you make $50 a day, right? Let's see what that is. If you make $50 a day.
Should be what, 10K?
Yeah. 250 times 50. Yeah. $12,500 a year.
Just about.
That's like an extra, a raise of $12K a year at your job. Like, that's some life-changing money. That's rent. That's groceries. That's an extra vacation for your family. Exactly. So I think, closing on that, like that mindset of not going for the home runs, but consistent base hits like you've shown you can do and you've done very well is the way to do it.
Exactly. And trading futures, especially funded accounts, you can't go for the home runs. You just can't. You have to be consistent and take profits early, especially when you're trading on accounts that have this trailing drawdown, like from account peak balances. They're brutal. We can get more into that in a little bit, but back to like the beginning of my options trading, I realized that after about a year that options weren't maybe the thing for me, because options are tough. They're not just a linear price goes up, I have an expected return of this much. Price goes down, I have an expected return of this much. You have to take into account all of the Greeks. The Greeks are tough, and they can burn you in multiple ways. But there's ways to play options that are safer. You can go for later dated expiries that have a lot less volatility attached to them, but then you're not making the crazy gains either. So when I was learning, I was playing these 0 data expirations. Or when I started, there was, it was what, Monday, Wednesday, Friday expirations.
Yep.
Now we have the everyday expirations. But either way, if you're playing a 0 DTE SPY call, like call or put, they're super volatile. And if you're buying them at freaking 1 o'clock right before the market closes, at least Mountain Time, 3 o'clock Eastern, that thing can just go to zero in an instant. So I got burned by options pretty hard in the beginning because I didn't fully understand the mechanics of them. And I did learn them over time and how to trade them safely. And I still do trade options, but my bread and butter is futures.
And it's interesting because as someone myself who trades options full time, like it really bothers me that you see across the internet these gurus that will post 800% power hour screenshot or 100% power hour option screenshot. And they're like, if you would have been part of my Discord, you would have gotten this too. And it's like, there's just so much false marketing in that because it's not typical at all.
No,
it's extremely tough. And the way to make it with options isn't through 800% gainers. It's not through 500% gainers. It's through consistent base hits and
20-30%
extreme risk management.
Yeah.
You know what? As someone who trades and teaches options full time, I'm like, dude, like you got to be really careful when you come and do trading and you start trading options because there's a very good chance you're going to get smoked off the rip.
100%.
So a lot of times for beginners, either a very small options trading account is good, Or B, just sticking with futures for a while. You know, a lot of trading is finding out what fits you. You found that options didn't fit you. Your bread and butter was futures, and it showed with your payouts. Some people try both, and they're like, you know, I want to learn more about options. It works for me, and that's great. But you have to, you know, whatever you're going to learn, you have to do it in a way that is safe and is not going to, you know, drill you for more money than you can afford to lose.
Exactly. And that's what's nice about learning with funded accounts, because you can go put in a defined amount into the market or to a prop firm company and get an account that has leverage. It's all fake. It's all, you know, until they put you on a live account, you're just trading sims. But the fact is, you have a path to payouts.
Yep.
And if you can meet their requirements, they will pay you. They, you know, people will talk about, oh, I didn't get paid out from this company. Well, were you gambling? Did you trade a strategy? Did you break their rules? And they don't own up to their own mistakes. And they're just like, this company sucks. They didn't pay me out. But in reality, they were just trading willy-nilly, not having a plan. The prop firm was like, hey, show me your trading plan and show me these trades, how they, like, I've had to do this before. They're like, I want to see a trading plan from you, and I need to see exactly trades you took before and trades you took in the future that line up with your trading plan. Because they want to make sure you're the one behind the computer taking the trades. You're not just following some guru, you know, buying and selling when they tell you to, and don't actually know what you're doing.
Yep. And I mean, looking at it, it's very tough to do, you know, to follow your plan, to go through the rules. But if you can do it, and if you can, again, follow the trading rules that are being set by the prop firm you're with, I think over time it can turn you to a lot better trader, and for sure build discipline, as you know you've showed.
Absolutely.
Now, as far as trading education goes, we talked about how obviously you were a Team Mastermind student. Yep. You've had incredible success. Did you go through any education before? And I think the broader topic here is how was it finding a mentor for you, or a mentorship program that actually helped you and led you to the path where you are now?
Yeah, I mean, I joined a handful of other Discords and, you know, online resources to try and find someone that's actually teaching how to trade. And a lot of them are just looking to make money. You know, the ones that can't teach. Not saying that's Team Bull, because Team Bull has absolutely revolutionized my trading. Like, without Team Bull, I would not be where I'm at in my trading journey.
That's awesome.
But the ones I found before, they talk that they're going to teach you, or they say, follow our signals and you'll make money. But then you start following some of their signals and you just lose money. And you're like, wait, this is just a bunch of talk. This isn't anything substantial to learn from. And then I joined Team Bull. Well, I actually joined last year around this time.
You were Mastermind 6.
Mastermind 6. And once I joined the Mastermind, I realized that the guys that are on your trading floor are the same guys teaching your masterminds. And these guys have spent years refining their strategies, learning the markets, and then they're willing to share what they've learned in a very distilled, understandable fashion that then you can go and apply towards the markets. And I may not, like, you teach a bunch of different styles in the mastermind, which is great, because then you can come up with your own way of using the information given to you to apply towards the markets.
And that was the next thing I wanted to bring up is, obviously, you know, in the program, right? We're not here to sell the program, not here to do any of that shit, but we teach a lot of different things. What was your process on taking what you learned and then kind of building on it yourself? Because there's only so much, I think, that you can learn from a mentor or mentors. Mm-hmm. A lot of it you have to apply, trial and error, you know, see what works for you, what doesn't work for you. As I've said before, trading is not one size fits all. So what was your process of, you know, finding your specific edge and finding what worked for Alex and how you were going to sustainably make money? What was that process like for you?
I mean, it took time. Like, for me, my issue with trading was always greed and my own mental fortitude to not want to chase more profits. So for me, I had to find a strategy that allowed me to filter out a lot of the noise that was coming in, like the desire to want to trade. So I had to find a way to create setups that I was confident in and then I could execute on and do that day in and day out. But then also create rules, which is what was great about Team Bull and the Mastermind, was it taught you how to come up with discipline in your trading. I wasn't a very disciplined person in my younger years. I would just do willy-nilly what I wanted, go about life. And it's fun, but in trading, you need extreme discipline to survive in these markets. Like if you don't have discipline, you won't survive. And so that was the thing that really taught me how to survive, was you preaching discipline in your daily life, your trading, everything you do comes down to discipline. And then that's going to bleed back into your trading. So my edge was coming up with a good trading plan, but then executing on it daily.
Dude, and I think that is so important, because one of the most common questions that I'm asked, they're like, Jdun, how do I build discipline in my trading? And I'm like, well, are you waking up early? Are you going to the gym every day? Are you keeping your promises to yourself in your daily life? Are you journaling all your trades? Because if you can't execute these tasks in your daily life, how in the heck do you plan on being a disciplined trader and following your plan when there's real risk on the table, when things are moving fast, and when you have to act quickly? You're probably not going to be. Because if you can't be disciplined in the everyday tasks, you're not just going to all of a sudden flip and become a disciplined trader in the act. So I love that point, and I think it's an edge that everyone needs to develop, especially in an industry where 90% of people are going to fail. Maybe more. Maybe 95%, 92%. I'm not sure what the exact number is as of today, but in trading, just like starting a business or anything with risk, a lot of people are going to fail. You know who the ones that are going to survive and thrive are going to be? The ones who stay disciplined. So I think that's a great point you make, and something that every person listening to this can learn from and enact to their everyday trading life.
Yeah. And you don't have to start all in. Start waking up earlier and build upon that. Then add in going to the gym every day. Then add in other aspects that you would like to be disciplined with, because you can't build a habit in a day. Nope. It takes time. So it took me a long time to build those good disciplined habits. And then it started bleeding over into my trading. I had found a strategy that worked for me, but I would have trouble sometimes sticking to that discipline. So that's where I really started to see major improvements in my trading, was when I became a much more disciplined person in life. And then I was able to keep to my plan that I made for trading.
Yep. And you get your strategy down, you stay consistent with it. And then as you do that and you're building that discipline in every aspect of your life, you're like, dang, I'm getting a little more confident in what I'm doing. I'm getting better at taking losses. I'm getting better at following my plan. And it's not, maybe this is different for you, but for me, I always say there's no aha moment. Like there's not one day where you wake up, the sun's shining, and a light bulb turns on in your brain where trading becomes easy.
No.
Like that never happens. Well, not for 99% of people. I've never met anyone it's happened for. But what does happen is that light slowly gets a little brighter, meaning that your trading slowly gets a little more confident. You get a little better at taking losses. You get a little better at clicking that buy button. You get a little better at staying patient, staying consistent. And that little better each day ends up being that big aha success. It's not a moment, in my opinion, but it's growth and success over time.
100%.
Now, as far as success goes, I'm sure you didn't just get into prop firms and start making a bunch of money. Maybe you did.
No.
But what would you say was your turning point? Like, what tips would you have for anyone here? What tips would you give your starting out self trading funded accounts, trading your own personal accounts? Like, what tipped the iceberg for you?
With the prop firms, you got to take it slow. Don't look at a prop firm as a way to make quick money, because you will burn a lot of demo accounts or, combines just to try to get to a funded account, only to have no idea how you got there and then burn it down in a day or two, right? So really take how you're trying to pass funded accounts the same way as you're going to trade a live funded account with them. Because if you don't, you're just going to be throwing money at them just to try and eke out a payout here or there, just to like keep yourself in the game for the next one. It doesn't work. It's not a way to build longevity with the funded accounts. The best way is to get an account, take it slow, and practice your strategy. The other thing is you can't over leverage. These prop firms give you a ton of leverage in futures trading. You know, a $50,000 account, they say you can trade 10 NQ contracts. One bad candle can wipe out that entire drawdown. Like, it's an insane amount of leverage they give you. You don't need that kind of leverage. You can trade 5 MNQ minis and make $500. Like, it's easy. It's not easy, but it can be easy.
Yeah, staying consistent. I don't think you were saying trading is easy.
No.
But like staying consistent in your plan and having a consistent plan is technically easy. You just have to follow it.
Right.
Do you have a set number of contracts you buy? Do you prefer NQ, ES, MNQ, MES? Like what's your style?
I trade predominantly MNQ. I will trade a little bit of MES. And on NQ, I trade 5 contracts. And that's plenty.
On MNQ.
MNQ.
Nice.
Half of an NQ. That's more leverage than you need. And it allows you to do a little scaling in terms of I can buy maybe 3 contracts when I'm seeing my entry criteria. Then you might get a move that starts going in your way and you're like, okay, I feel confident to add in the last couple contracts.
So you like to average into your trades?
On winners.
On winners. That's cool. You don't see that as much these days. You hear about a lot of people averaging down, when in reality, the best thing you can do, and this is something that even I struggle with, I know a lot of people do, is, averaging in to your trades. Like you're in a winner and you see it going in your direction, you add to that winner.
Correct.
Oftentimes people get caught doing the opposite. They take a trade, say the 3 contracts, it goes against them. They didn't plan on adding more, but they do, and then they start averaging down to get it cheaper, and it becomes
now you just doubled or tripled your risk.
Yep.
So like you think like, yeah, I can get it cheaper, but people don't also look at the downside effect of it. They're like, okay, I was willing to lose 100. Now I just doubled my position. Now what? Am I willing to lose 200, 300 for what was my initial gain I was looking for? If I was looking to risk 100 and I was looking to make 200, well, now the math just doesn't start mathing. It gets really risky really quick if you're averaging into losers with futures.
Yep.
Because they have a ton of leverage built into them. And so as soon as you're doubling your position, you just doubled your risk. And so you have to have that understanding of how much I'm willing to lose on a trade before you ever enter into a futures trade. The other problem is with funded accounts, they have trailing drawdowns, some of them from account peak balance. So you could go $1,000 in the green and then it slips against you a little bit and you actually just made $500, but your drawdown is only, if they have $2,500 drawdown, now your drawdown's down to $2,500. So with futures, especially on prop firms, I'm a big believer of until you're out of these drawdowns, you need to be an extremely aggressive profit taker. And you can't worry about left green on the table. You have to just take what the market gives you and move on to the next trade or the next setup.
And with your trading style, have you found more success when you average into a trade versus, averaging in is when the trade's going in your favor. Averaging down, obviously, I think a lot of people do it wrong, but at least how I trade, maybe you disagree on this. If I'm going to average down, I plan it beforehand. So say,
100%.
You get to a spot where you want to add. I'm like, all right, I'm going to add my first starter here.
Yep.
But if we go down just a little further, I'm going to add the rest of mine. Mm-hmm. Is that something, do you ever do planned average downs, or are you like strictly, nope, I add once. If it goes against me, I cut my loss, but I will add in if it's a winner. What's your take on that?
I've been burned more times averaging down than I care to admit. And so I don't do it anymore. It's just something I don't do. And I understand the reasoning behind it. There are times where, a support or a resistance zone, it's a zone. It's not a hard number, hard level. So it could be good to layer into a position if it's planned for. I'm going to buy in a third of my position at this, If it goes a little higher, I'll buy in another third. And then, okay, we're to our final spot that I want to buy in, full position. And then you have that hard to find stop. If you're trading that plan, that's great. That's just not my plan. My plan is I look for basically sniper entries. I could get into my strategy, but I trade on basically, I'll use a 5, a 2, a 1 minute, and then I get my entries off a 15-second chart.
15-second chart?
15 seconds.
Wow.
I like to see inside those candles. So when you're on a 1 minute chart and you're creating a doji, I have the 1 minute chart up to see that that's forming, but I like to see the strength of the buyers and the sellers inside that candle. And so I'm reading price action and I take scalper entries, like sniper entries. And so I can define my risk very tight. And if it moves out of that, I was wrong. And you look for the next trade. So I'm looking for basically where I learned a lot of my strategy for this is one from JMorg. He teaches a lot of this, but it's like your second entry longs or second entry shorts. So the market's moving in a direction or you've just changed directions and it comes down and is going to test to go back up. So you now just created a new higher high. Well, I'm looking for that higher high to break and I'm going to get in on the long.
He uses the 15-second chart too. I don't know how you guys do it. It's impressive. It's awesome.
And I'll also even use like a 100 tick chart. I like tick charts because they can show. So when you're trading like a candle chart, volume is the size of the candle, the amount of trades that were taken inside that candle.
Yep.
But a tick chart, depending on how fast candles are forming, that's how much interest is in the market. So as ticks are forming quicker, that means there's a lot of volume forming all of those ticks. So for me, I like tick charts as well because I can see aggressiveness in the market. And I want to be in the market when participants are there and it's actively being traded. You don't want to be in the market when it takes forever for a new tick to form because that means there's indecision in the market. There's not a lot of participants from one side or the other.
Yep, you're probably going to get chopped out.
You're going to get chopped out.
So tick charts in the 15-second chart. That's crazy.
Yeah.
Now, you said you mentioned that you use the 5 minute, 2, and the 1 as well. Where does for example, I love the 5 minute chart. That's like my bread and butter. Where does the 5 minute chart come in for you and how you trade?
The 5 minute comes in terms of figuring out market structure and the overall trend. Because if you're stuck in a 15-second chart, I mean, it's moving all over the place.
It's like a damn heart rate.
Yeah, yeah, exactly. But it's great for seeing inside those candles to understand where you should maybe be placing those sniper entries. But the 5 minute, if we're in a strong downtrend, I don't want to be trying to go long and try to, scalp weird little upticks in the market. I might be looking for when buyers are stepping in, or if we're on a downtrend and it starts to move up, that's a point where I'm interested to short. But I'm not trying to go long against a really strong downtrending market. So I use the 5 minute to understand where the trend is. Are we consolidating? Are we expanding? Because the market really only has two states. We're either going sideways or we're trending. So I need to understand where we are in that zone to be able to then refine down into a very small time frame to take my entries.
And so you like finding the trend entries. You're a trend trader, you could say.
Yeah.
Yeah, same here, man. I obviously have been doing this for 8 years, have had times where I've tried to catch tops, tried to catch bottoms, and you can make money doing it. The problem is when you don't make money doing it.
Exactly.
It comes with some very violent candles to each side. It comes with a lot of stress, in my opinion. If I'm trying to catch a falling knife or short a top that's very aggressive, I'm instantly stressed when I press buy. And
100%.
I don't want to be stressed when I press buy. That goes against my system, goes against everything that I've tried to accomplish in 8 years of learning how to trade, right? So I love the fact that you trade higher highs, higher lows, lower highs, lower lows, trend entries, finding those sniper entries within and defining your risk. That just shows again that you're going to have a lot of success doing that.
Yeah. And that's why with the funded accounts, I've realized I needed to have extremely tight risk to survive and keep the accounts. So that's why I've come up with ways that I can keep super tight risk and have great success. Because you can't let futures get away from you. If they do, they'll eat your accounts alive. They have a lot of leverage in them, just like options have a lot of leverage in them. But options, at least, I mean, it's not like you're never going to hold an options contract to zero, but we all have. Let's be honest.
Yeah. Unfortunately, we have.
Yeah, of course. It's just part of the learning process. But futures, if you don't have defined stops, they'll chew through your whole account value and just say, bye-bye.
Yep. You'll be back to buying evals.
Yeah. Or, I've put in live money into self-funded futures, and I've done well with that as well. But all of a sudden, you're back into your own head. How do you manage your risk? So there's a lot of things that with self-funded futures, if you don't have a solid plan, I mean, it'll just wipe you out quick.
So something that I've noticed about people that trade funded accounts and prop firms in general is a similar phenomenon to what I've seen with people who paper trade first. And let me know if you've ever dealt with this or if you've heard of this or if I'm just out of my mind. So a lot of times people will paper trade to learn. They'll go through their strategy, they'll make money, and oftentimes they will make money paper trading. Similar to how if someone's doing an eval, a lot of times they'll pass the eval. Mm-hmm. Does something switch, you think, for traders? Did it ever used to switch for you when you go from eval to funded account where you're technically trading? I understand it's not real money, but like you're technically trading so you can make real money. Because something that I see a lot is people will paper trade, they'll define a strategy, all will be well. They go to real money and they get smoked. And the only, explanation for that is the emotions that come with real money. Yep. You go from eval to express funded account, whatever you call it, right? You're trading for real money. So is that something that you ever noticed? And if it was, how did you fix it? And if it's not, how would you recommend, someone who might be dealing with that, passing evals, failing funded accounts, how do they get past that?
I feel like that's a very person by person case, because you have to look at why you might be struggling passing, or you can pass it in eval, but then you get into a funded account. Why all of a sudden are you struggling with it? Is it because you don't trust your strategy? Is it because you haven't done the mental work to be confident in what you're doing? Or is your leverage wrong? Because there's been a lot of times where I'll pass an eval and then you get into a funded account and you don't understand your leverage and how much you should be putting on a trade. And it just, you can feel the stress in the trade because you have too much leverage. So a lot of it comes down to start small. Don't try to go make $1,000 a day on your brand new funded account. Build it up. Build that cushion, make the $250, trade 2-3 MNQ, and you're not going to be stressed out about it. But if you go in and instantly, all right, I'm buying 2 NQ, and you get a $600 swing on a 60-point candle, it'd probably be more than, it'd be like $600. That's just, you haven't experienced that kind of money fluctuation to be able to internalize that stress. So you need to start small. You can't just jump in and think that you can handle $1,000 swings on trades without ever being in a trade that has $1,000 swing. That's not something that most people can just walk into the trading world and be able to handle. You're watching literally a week's worth of work bounce up and down.
You got to earn your size.
You got to earn your size. So start small, build your cushion. And then even then, if you're making $250 a day trading in your funded accounts and the max you can take out in 2 weeks is $2,000, 10 days, $200, you made your $2,000. Why do you need to over leverage, over stress yourself and make bad decisions because you don't understand what you're doing yet? So my biggest thing for someone starting out in funded accounts is just start small. Don't set goals, but define your size. So trade 2 MNQ. See how that plays out in the market. You have to learn your instrument. I mean, NQ can have nasty wicks. It can really have some wild volatility to it. So one thing that I learned trading NQ is when you get those big impulsive moves, those are where you should be selling, closing out your positions, not sitting there waiting like, oh, that was a great move down. I bet it keeps going further. Most of the time it rejects right back up. And you're like, wait, I just let a $500 trade go back to break even? Like, and then you're like, well, it's at break even now. I guess I can just sit here and wait and see what happens. But no, it starts to move the other direction.
Yep.
Easy down, easy up. I mean, there's a lot of times where the market is irrational. And when you get the moves that pay you, take your money, run, and go enjoy your day.
That's such an underrated mindset and trading hack. You know, people think that more trades equals more money, which couldn't be further from the truth.
Yeah.
More quality trades equals more money. But oftentimes, especially when you're under the rules of a funded account, for example, if you're sitting there firing off trades like a dang machine gun, one of those is gonna end up blowing the account or stopping you out. Or if nothing else, hurting your confidence, hurting your discipline, hurting your trading psychology. It's not going to have any good impacts taking more trades.
No.
You're better off. You can't see the progress because it's not measured in monetary, like by what I'm about to say. But if you're sitting there and you can watch charts and not trade unless you have an A+ setup, you are getting better. You just don't see it because you're not making any money from it, but you're also not losing any money. Like I wish we could somehow track like how much money you were not losing on a screen too, because I think that would motivate people
for sure
to be a lot more disciplined.
Absolutely.
Unfortunately, we can't. I think that the only metric of progress is by that P&L you see on the screen. But in reality, one of the best traits, in my opinion, a trader can have is the ability to not trade unless their A+ setup presents itself.
100%. And also, there's only so many taxing decisions you can make in a day.
Yes.
And especially as a new trader, you think you need to be always engaged with the market, always in the market, have some exposure to it. But in reality, you're just wearing down your mental capital for the day. Yep. And then you start to make poorer decisions because you don't realize that these are big financial decisions you're making and they wear you down. You may not notice it, but you're going to make poorer decisions the longer you stay in the market. Unless you have a decade, 2 decades of experience trading and you know those setups, the probabilities of how they're going to play out. I can't say I have that confidence yet in the market or in my setups. I have setups that work well for me, but at the same time, why do I want to increase my risk through a longer period of the day? If I can come to the market and say, 2 losses, I'm done. Just hands down. If my first trade of the day is a decent trade, I walk away now. There is no reason for me to sit there and to give that back into the market and then get into this revenge mindset where, I made $400. I just lost 200. Let me try to make the 200 back. These are not good thoughts that you should be having while trading. So you have to be able to disassociate the money from good trading habits.
I hate going green to red too, man. That's why, like you just said, if I take a good trade, say I make $500 and I see another good trade set up, I'm like, all right, if I'm going to take another trade, I'm going to define my risk to say $300 to where I for sure walk out of this no matter what, still green. I'm not going to give back all my profits and go red.
Yep.
Drives me nuts.
Yeah.
On the flip side, if I take my first red trade of the day, say I'm down $500, I might be like, you know what? I'm going to take one. If I find another trade that fits my criteria, I take one more trade, risk is defined. But if I lose that second trade, done for the day.
Yeah.
And it sounds like you're similar. You have a 2-loss limit for your day and you're done?
Absolutely. Because there's been times where I didn't have that hard limit and you just spiral and your psychology just gets the best of you. And there's no way that you can recover mentally if you get that deep in. And so the best way to limit is just to have hard rules that you define, that you follow day in, day out. And 2 losses, I think you should be done for the day. There's no reason for you to try and go make that back because you're just going to make worse and worse decisions. Unless you've been trading a long freaking time and you know what you're truly doing.
I think that experience breeds excellence in this. I think the more good experience you have, journaling every trade, getting good quality screen time, looking and following A+ setups, all that can breed that excellence and confidence over time. But you see a lot of people that hop into this, they try firing off a bunch of trades. They're not really confident in what they're doing, and it ends up smoking them.
Yeah, absolutely.
So as far as your trading goes, do you have a specific morning routine that you follow with your trading? Like what's it look like from the moment you wake up to when the market opens?
Yeah, I definitely have a morning routine. Like I get up at about 6:30, plenty of time before the market's open.
An hour before.
Hour before, talking Colorado time here, and get up, make myself coffee, just wake up, go outside if it's nice out, get some fresh air. It's really important to just be away from screens for a bit because you're about ready to spend a ton of time in the screens. Make breakfast, and then about 6:45, 7 o'clock, I'll go sit down at the computer. And that's where I started a daily chart, and I look top down where the market is.
Are we daily? Do you go to the hourly?
Daily, hourly, 10-minute, 5-minute, down to the 1 minute.
10-minute. Interesting.
Yeah, I like some different time frames. They can show you some interesting stuff. I know a lot of people use the 15.
Hey, that's, it's cool again because you hear some people will use the 15. Some people will use the 10. I personally like the daily, hourly, and 5-minute, sometimes the 15. Some people are like, you're crazy. Why aren't you using the 4-hour? The next person might be like, why aren't you using the 10, the 5, and the 2? It's very fluid in what you can do. Each person has their own edge, so that's cool to use the 10.
Yeah, every person sees the market in their own way. And that's what's amazing about the markets is there's a lot of different ways to extract profits from them. But it's finding that edge that works for yourself. But back to the daily routine is I look at the daily for where's the overall market trend. I use the hourly to plot key levels. I'm not a huge levels trader. I'm more of a define my risk and take a trade to my risk to reward targets, especially with futures. Like I'm not trading from a level to a level. I'm trading, I can define a 1R or 2R. Don't usually trade 1R, but 2 to 3R.
Sometimes it happens though.
Sometimes it happens.
I like to point that in because obviously you're looking for, you said 2, 3R, 4R. The more R, the better.
The more R, the better.
But sometimes how it works out is, you may get a 1R trim and get stopped to break even. It might end up being a 1R trade, and that's just how it goes sometimes.
Exactly.
I think it's not talked about enough. You see a lot of trader influencers that are like, oh, if every trade of mine isn't 4R, then it's a fail. And it's like, well, then you're obviously full of crap because like not every trade ever you take is going to be 3, 4, 5, 6R. Ideally, a majority of them end up that way, but you're going to have times where it might be negative 1R, negative 2R, 1R, 0.5R. If you notice and you have the experience to realize like, hey, I liked the setup. I saw this, this, and this. And what I'm seeing now is not playing out to what I thought was to be. You have to have that confidence to cut it.
Exactly.
You have to have that willingness to adapt to what you're seeing to follow your plan.
And that comes with a lot of time looking at charts, understanding what you're seeing, being able to see, does this market still have legs to go the direction I think it does? Or did we just hit a zone of consolidation and there's no reason to be sitting here holding a trade while we're just chopping for the next 30 minutes? Yep. And if it only gave you that 1R, why keep that risk on for longer than you need to?
Yep. So when the market opens at 7:30 here in Colorado, do you typically take trades in the first 15 minutes, 20 minutes, or what's your prime time?
I try to not take a trade at least for the first 30 minutes.
Okay, me too.
It's too much volatility, especially with futures. They move so quick, you don't need the prime volatility to trade them. Sometimes my best trades for futures is at night.
After hours.
After hours.
Interesting.
Because the markets move in a slow, controlled way. They move in ways that, you get news and you have insane volatility. Not saying I trade news. Trading news is not good.
Yeah, they'll kick you off the fundeds for that, won't they?
I mean, depending on the company, but if it's part of your trading plan, you can trade them. But if it's not like if your normal setups and the news happens, but it's too risky. There's too much volatility. There's no reason to be in a trade when news happens.
I'm with you, especially as a beginner. And if you've been trading for less than, say, 4 years, the number is subjective, but a lot of times people who trade news, it ends up being more gambling than actually trading.
100%. I mean, you need to watch a dozen FOMC meetings to understand what the heck is going on. Like, more than that. It's just maybe paper trade it and see how wrong you would have been.
Yep.
But
it's true.
But no, it's not worth it. It's gambling. Like, there's no real edge there. And sure, you might get lucky here or there, but you're going to get burned. Like, it's not, as a beginner trader, there's no reason to be trading news. But back to the original point was saying that I like to trade after hours. The moves are more controlled. You don't have these insane volatility, which means you can't go put on a ton more leverage, but you can watch the market play out in a way that doesn't build this anxiety in you, because, you know, your P&L just ticks up slowly. And I'm okay with slow controlled gains versus NQ during normal hours throwing you 30-point candles.
Quick little 100 points in 5 minutes.
Yeah. Yeah. We've all seen.
Sunlight.
Yeah. Yeah. Like that'll take years off your life. No, I'm just kidding.
Really will. Right here start coming in.
Yeah. Yeah. So I like to let the market settle itself. I give it time for it to show either it's going to be a trend day, consolidation day, and then that might dictate how I trade. If it looks like it's consolidation, then you can maybe try and short some highs or long some lows. But you don't want to be doing that if you're in a trend day. Like you're not trying to, you know, short a top on a trend. Like you're going to get just smoked. So I like to let the market kind of show its colors for the day before I jump in.
Yeah, and I think that when it comes to shorting trends, you know, sometimes we talked about this earlier, but you can make money doing it. You can make money doing just about anything. You can make money closing your eyes and spinning in a circle 3 times and clicking buy or sell. You know what I mean?
Yeah.
Like, but the point is that over time you're going to get burned doing that. And even if you do win, let's say you short a top and it moves 2 or 3 points and you make a little money off that, the risk reward that you put on to place a trade like that is usually not going to have a positive R multiple over time.
Not at all.
And that's what I think really matters is, you know, over time, your year to date, how are you going to survive for 3 years, for 5 years, you know?
Absolutely.
Do you think that you will continue using prop firms in 2025? Like what's your 2025 plan? We're currently in September of 2024.
Yeah.
Crazy. It's almost over.
Last third of the year. It's coming up quick.
Almost Q4, man.
I think I will always keep prop firms as a part of my trading, but I've been taking profits and slowly moving them over into self-funded futures accounts, because then you don't have to follow their rules. You don't have to wait 10 days or this many days to get a payout. You know, I've been trading recently a lot with my self-funded futures account through Trade of 8. They have a great futures trading platform, great commissions. And with $1,000 in there, you can make a couple $100 a day very reasonably. And every day you make that money, you can hit withdraw to bank, and the next day it's in your bank account. There's no rules telling you what you can and can't do with that.
Yep.
So my goal is to slowly build up my own self-funded futures accounts and then keep trading funded accounts until they either tell me I made too much money or they just let me keep trading them.
That's awesome.
There's no reason not to, right? Like
kind of like with how a lot of these sports betting apps are. It's like you make too much money from them, eventually they'll limit you. So
yeah,
if you do that, and if you keep winning how you are and wiping them clean, then
or they'll move me to a live funded account and we both win.
And you'll keep trading with your own money. So win-win there, right?
Yep, 100%.
What do you think is one thing that you need to improve on for 2025? How do you take that $10K a month and scale your size with time, of course, and say make $15K a month or $20K a month? How do you plan on scaling and bettering your trading in the next 6 months?
By continually working on my mental game. because at this point, I'm a decent enough trader. I'm not saying perfect by no means, but I have an understanding of how the markets work. I have an understanding of how my strategy works, but it's always comes down to working on that discipline and mental game. Because if you can't handle, like I was saying, size, you got to earn your size. So being comfortable in slowly building that size up in a way that's sustainable. Not just like, oh, I'm going to go take a $10,000 self-funded futures account and I'm going to make 10 grand off it tomorrow. Like, that's not how it works. You slowly build the accounts up. You slowly build your size up over time. And with the funded accounts, you don't need to build size. You can just add in accounts, keep your size very similar, increase your leverage by adding on another account or another 5 accounts. And that way, you're really doing the same thing that you've always been doing. You just now have the opportunity to add another $200 to your day because you added another account, or another $500 because you added another account. And so for me, it's just slowly building up the amount of accounts I have with these funded companies. I mean, you can have accounts with all the funded companies. They don't have any rules against that. So just doing the same thing I'm doing, add more futures funded accounts to my portfolio, taking that money that I earned from them, building my own futures account up, and taking anything else and putting it in long-term investments.
That's the way, man. You know, I always like to preach that as long as you're trading, you're still working for it's active income. Like, you're still working for your money. There's still risk on the table. You know, it's not like passive income where you just put the money out and it works for you and there's no stress. Like, there's stress in trading. You're working for it. You're placing, you know, your time, whether it's 5 minutes or 5 hours. And in turn, some days you get paid. Some days, obviously, you don't. The goal is to get paid over time. Do you have any places or any goals with your trading to where, you know, once you make X amount, you're going to place it in this investment, or this investment? Or what's your long-term game with trading? What's your 3-year, 5-year plan?
My long-term goal with trading is to build up a stock portfolio that either has dividend income or is just long-term investment holdings. Because like I said, at the very beginning, I was able to buy my house because I was investing in stocks over my 20s. And that had grown to enough to be a down payment for me. So long-term investing in stocks is the ultimate goal. But also, I'm very passionate about real estate. I've been working on getting my real estate license. And so I would love to invest in real estate as well and build that passive income like you talk about. Have your money be working for you, not be working for your money.
That's awesome. That's what I've done too.
Yeah.
So I was going to get to that is I've taken most of the money I've made trading and obviously paid bills, lived a little, et cetera, reinvested some, but a lot of it's gone towards real estate flipping and putting that money into what is actually passive income.
Exactly.
And either lending or funding flips where the work is subbed out. And I can tell you that there is making money trading is great. Obviously, we both know that. But there is no better feeling than when you can take said money trading and put that money to work for you and see a paycheck hit your bank.
Absolutely.
That you spent no time doing. You know, that's, to me, that's the ultimate goal, is you use your trading to buy your time back.
Yeah.
It takes time in the beginning to do, but the end goal is to buy your time back. You know, the Lambos are cool, the houses and the vacations, it's all like, you know, it's cool, but it's temporary. You know, you can have as many of those as you want, but what you can't buy, you know, physically is time. So if we can buy that back by making money trading and building passive income, I think that's the real flex.
I think so too, 100%. I mean, I want to, like, you're building a skill for a lifetime, learning to trade. But ultimately, I want to put my money to work for me and to have the ability to trade because I've learned it, but not have to need to trade and just have a real estate portfolio that's generating me income. And that's the ultimate goal.
It's funny. Before we wrap up here, like I've said many times, I'm like, the end goal for me is that I don't want to have to trade anymore if I don't want to. I love trading. I think it's something that in one facet or another will always be in my life. Like if I don't want to trade anymore, I just want to be able to say, F it, you know, I'm going to take 2 weeks off because the passive income's working for me, you know? And so end goal for me has always been like to not trade anymore, but to not have to trade if I don't choose to.
And you'll trade so much better when you do.
Yeah, seriously, when you're not thinking about the money, when you don't have to trade, it's like it just naturally comes. I hate the word easy, but like it does come easier.
It reduces
right?
a lot of stress from it.
Yes.
Because you can think from a clear-headed position instead of I need to trade because I need to live versus you see the opportunities clearer.
Yep.
Because you have a clear mind to come to the market with.
Yep.
It's not like you need the market. You are a participant in the market because you just want to be.
Yep.
And you've put in the time to get there. And that's the ultimate goal.
It's a beautiful thing. Now, as we wrap up, I always like to ask, what is one thing that you would tell your younger self as a trader, or one thing that you would like to share with the audience that you think could help them and that would have helped younger, maybe less experienced, less skilled you?
It's a tough question, but
not to put you on the spot.
I would say really listen to what people are trying to teach you. Because there's a lot of people that want to sell you a course or want to say that they're good at something, but really listen to what they're trying to tell you and see if they truly walk the walk. Because there's a lot of people that are just out there to get a buck from you because they think they can offer you something, but don't actually offer you really anything of value. So be really careful of who you get your information from. Because there's a lot of people that are just trying to make a buck. There's not as many that are truly invested in wanting to see you succeed.
Completely agree. It's like the Wild West on the internet, you know? There is a lot of good value. I think that it's never been more accessible to learn about things like trading, real estate, e-com, whatever. Like the skills are out there. You just have to, make sure that who you're learning from, like you said, actually walks the walk and wants to see you win, which I think Team Bull does a pretty good job of. I'm a little biased, but
Team Bull does an amazing job. I wouldn't be sitting in this chair if it wasn't for Team Bull. I mean, I owe all of my success, not to Team Bull, but it's a lot of what I've done myself. Yeah. But Team Bull,
that man in the mirror. I'm glad we could help.
Exactly. But Team Bull was the one that really got me to dive into discipline, if anything. That's awesome. That is what changed everything for me.
That's awesome. Well, Alex, thank you so much for joining us. It's been a pleasure having you on here, and can't wait to hear from you, say 6 months from now, and see where you're at in your trading.
Absolutely, man. It was a pleasure to come and talk to you and just talk about trading, the thing we both love. And yeah, it's been a pleasure. Thank you very much.
Sure. For everyone listening, make sure if you haven't already, you tap in, hit that subscribe button. We have a ton of valuable episodes, different strategy videos, and much more resources coming your way to help you and your trading and your confidence in what you do every day as a trader. God bless. See you next time.